We've seen this rally, the stealth rally underway for the S&P for a few days now. Is it exhausted? Are you exhausted at this point?
I think everybody's exhausted, that's for sure. I mean, the markets have a way of doing that to all of us. Even in bull markets, I think people get exhausted. But this has been a particularly trying year because nothing has worked, right? Not bonds or stocks. And even commodities peaked back in April. So it's just been a real, pooper of a year, as we say. And people are tired. They want to get it over with. Let's just get it done and move on
Mike,
next year.
That's the point.
So look, I think the market. I agree with what Jeff is saying. I think that yields, have pretty much priced the Fed at this point. Doesn't mean they're going straight down, but the risk that in the market for the equity market is on the growth side, right? We've been on that case for the last 3 or 4 months, and we still hold that view. However, markets don't trade in a straight line, and so we're getting a bit of a rally here. We think they can last for a month or two because we're not sure the earnings are going to come down fast enough to convince the market how bad 23 is going to be on the earnings front.
Okay, let's just talk about the timeline around this in a little bit more detail. Mike, you're absolutely right. Everybody just wants this to be over. They want the bottom to be in. They want capitulation. I think everybody's got used to very truncated and short time frames. I remember you speaking at the beginning of this whole episode, talking about the fact that you thought that this was going to be an accelerated cycle. Where are we in the cycle? Because the market's kind of mood and maybe where the economic reality do seem to be in different places at the moment.
Well, that's right. I mean, we call this the hotter but shorter cycle, and everything since the COVID lockdown has progressed at an accelerated pace, like we haven't seen really in any of our careers. So, as we've been saying, the kind of final chapter to this bear market probably will be fast as well. If we'd had this conversation 3 months ago, we probably did. I thought we could have this all wrapped up by Thanksgiving and maybe have a nice ending to the holiday period and say, okay, we can move forward. Mm-hmm. But unfortunately, I think it may linger into next year. But either way, that's a pretty darn fast cycle. When you think about the economic cycle, this time started in May of 2020, and we're not even 3 years into it, and we're already talking about recession. So it's all happening kind of to plan. Markets always, don't trade exactly in line with that, but we think we're on path now to have the finishing move, which is going to be all about the earnings disappointment, right. Which is going to.
When is that reckoning, Mike, of earnings disappointment? I thought it was second quarter. I thought it was third quarter earnings. Is it going to be the fourth quarter? Is it next year?
Well, we never thought it would be all done by the second quarter, but we thought there was a chance it could be done by the end of this earnings season. We're losing a little bit of hope in that or faith in that because we're just not seeing the willingness of companies yet to throw in the towel. It's interesting, Alex, markets, whether it's the bond market or whether it's the stock market, has become somewhat addicted to guidance. Okay, for the bond market, it's the Fed, and for equity markets, it's company management teams. And so the bond market is just waiting for the Fed to come out and say we're done, and the bond market won't get in front of that, even though everybody knows they're probably closer to the end than the beginning. It's the same thing for stocks. I mean, every investor we talk to knows the earnings are too high for next year, but yet the earnings remain very sticky on the upside because companies haven't thrown in the towel. So it's a process that it always takes longer than it should. We think it definitely will be the end of fourth quarter earnings season, which is basically February. But it could be done as soon as November, December. We'll just have to see how this earnings season goes.